What's up everybody, Tom here with another video. In today's video, I'll be discussing the latest stock market news moving the markets right now. We'll also be taking a look together at our technical analysis levels for the S&P 500, Nasdaq, gold, Bitcoin, silver and US dollar to try to find out what's going to happen next in these markets. It's been all about Bitcoin for the last couple of days with some big moves down coming into, of course, Lunar New Year. Will there be a turnaround like there's been before? Let's find out. Stay tuned, guys. So as we like to do, let's get started by taking a look at the S&P 500 heat map here for the last 24 hours. You'll notice a couple of things. Firstly, it's mostly technology stocks that have been up. Apple, 3.67%, Microsoft barely up, and a few of the other FANG stocks and semiconductors up pretty heavily, including Intel, which has had a great recovery recently. So congratulations to anyone that's been in that one. But what we haven't seen is big moves over the last week in things like JP Morgan or Bank of America. Both of those are actually off about 4 or 5% if we take a month to date kind of chart. They're not doing as well as you would expect for these particular stocks. And a lot of that is due to the fact that we're seeing a resurgence of tech across the board. Yesterday, Nasdaq 0.82% up, whereas the S&P 500 and the Dow Jones were actually being dragged lower by the other pairs. And of course, they ended basically flat. If we take a look at the sectors for yesterday, XLK, technology sector up 1.29%, energy down 3.38%, but it's had a great run this month. And most of the others kind of lackluster throughout the middle. So we're not really seeing that breadth. We're seeing something similar to what happened during that period of August last year, where basically technology was leading, technology was doing everything, and it was pulling the market along with it. Are we going to see the same thing that happened in September into October again in Feb? We'll be talking about that throughout this video. So we've got here energy, 11.58% return for the month of January so far. That's great. We've got consumer discretionary, 6.16%, obviously hoping on more stimulus checks, a very important part for that. Recently, technology coming back through, and of course, we've had some of our other pairs here, utilities starting to kind of move up like we discussed, and a few others just kind of sitting around their 2 or 3% returns. So it brings me to my next point about articles being written, and this happened in August, it happened in July last year. We saw every single article go from talking about bubbles to talking about there's not even really a bubble, it's just more about there's going to be a rally and everything's going to be great. So we've got here, rally time, the biggest red flag in this bull market just vanished. Now, that's the type of article that makes me think, oh, okay, well, how many of these are being written right now? We've got another one here from MarketWatch, literally taken today. Tech stocks won't crash, according to this fund manager, dubbed the English Warren Buffett. So while I agree that I don't think tech stocks will crash, because the word crash means, dropping a huge amount, like similar to last year, 30, 40%, I do think that there could be a correction coming. And we've talked about this a few times on the channel throughout January. We know that February is generally a weaker month in the markets and has historically been so. January has also historically been a positive month. So we've got Feb here and March running a negative 8.4, negative 12.5%. Now, they've been slightly changed because we've got the 2020 data in here, but you can see that these months are historically low and April is historically high. So we're very bullish on the market here over the medium to long term. But in terms of when things go really bullish, you've got to start paying attention to, well, what is the technical analysis telling us? And are we reaching levels that make sense for people to start removing some profit, start clipping off some areas? So we know that, of course, throughout all of history of the S&P 500, January is good, February is not so good, March is lackluster, April is the best month, very great month. And then, of course, we've got July and December. And things are starting to play out very, very similarly to these. They've done so forever, really. And it makes sense that February could be the month that we're looking at for some volatility to return back into the markets. So let's now talk about this technical analysis levels that we're seeing right now in the market. We'll start with the VIX. And what's most important about the volatility index is it's holding above 20, guys. We've seen this hold now forever, pretty much, ever since the crisis began. And whenever the market or the volatility index is above 20, really anything can happen. We can start to see some pretty big moves occurring in the markets. Remember, above 20 is a not normal, very volatile market, and below 20 is generally a more stabilized market. 21 though seems to be acting as level of support. We could see here it's found pretty much spiking pressure off this almost every time. So between 21 and 20, we'd hope that the volatility index will find some support, potentially spike up, and that could be one of the catalysts that we're looking for when we're thinking about, well, is the market going to come down? We want to be looking at the volatility index. So definitely stay tuned to the channel and we'll keep following this throughout the next couple of weeks. Dollar index, though, is another one that people are looking at. So the dollar index came straight off our 50 exponential moving average, just below the 91 level. This level is super important. We saw here previous resistances acting as resistance again, and now it looks like the dollar index is definitely weakening through this pair right now. We've almost got a 20-50 cross to the downside. So the dollar index was holding quite a nice little trend line. It broke that trend line, retested it from, of course, the bottom up. You could see what happened there. Big rejection candle came through right here, and then it started to make new lows. Basically, the dollar index is starting to look like it wants to come back down and retest maybe the 89.70 and possibly even the lows that have been occurred. We're in that tough kind of area here where we now need to see a little bit more from the dollar index. Do we buy it at 90? Well, there is some buying pressure that's come through, but it wasn't as good as it is over here. Of course, over here, we were looking at hopefully getting past 91 into the 92 zone, but we just failed to do so. We failed to get above that previous resistance. But this bodes well for other trades. So if we're thinking about dollar weakness, what could that mean for gold? Well, here we've got gold on a daily. Let's zoom this one in. I just want to talk about some of the price action that's happened recently on this pair. So firstly, we have this standout candle here. Selling pressure came into gold. It went underneath the 1820. And then what happened is it found huge buying rejection. That is, of course, a bullish hammer or pin bar, as many people would know it. If we then go into the 4-hour chart, what we'll notice is that we had a beautiful level that's just occurred. And this was a level that I'm sure many of you in the channel were looking at. 1861 resistances. 2 resistance here was broken through. Now, there's a few things that come into this that I think are just so worth knowing. Firstly, we have a classic kind of stop hunt situation where the market looks like it has no idea what it wants to do. We have this massive candle with huge wick rejection, and you can see it quickly shot down, found buying pressure, came up, tested the resistance, failed to do so. It then closed above after that on the 4-hour, went a little bit higher, and then of course came back down and tested the role reversal level where the resistances became, of course, support. We had a 20-50, and now we've had a 20-50 cross between the 20 exponential and the 50 exponential moving averages on the 4-hour. So this bodes very well for gold moving forward. If we continue to see the dollar slump, what does that mean? Well, gold should go up against the US dollar. If we now see a movement higher here, we'll be making a new higher high, breaking to a new peak, and that should expose the 1900 level. If we actually zoom this out on the chart right now, you'll see why I've got the 1900 level, and we had it before as such a key level and a key zone. 1900, resistance, 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 support, resistance most likely again. So if we see a new high here, it should trigger buy levels into the 1900. It could be a very good little opportunity here on gold. I'm sure many people are already in it at these kind of levels. Now, if we get past 1900, what's the next technical level that a lot of people are going to be talking about? Well, of course, the 1960. And again, we zoom that out, you can see why. Previously, it was our target as well. 1960 was previous resistance was probably going to act as resistance again. So we've got 2 very clear levels for gold, but I think it's an exciting time to be looking at this market structure down here, thinking about what this market structure was doing, thinking about this particular point here, and just showing you how technical analysis works in the market. It does such a great job when you get this kind of market structure. I really love seeing this type of thing in the markets. It's one of the best types of setups that occurs time and time again. Silver, very, very similar to gold. It's doing a very similar structure setup. You can see the structure looks almost identical. Usually gold's one of the better precursors to give you the signal And then if you want to take silver because you believe in it more or because you want to see maybe more percentage returns, silver is like that altcoin if you're talking about cryptocurrencies. It's the one that goes crazy and moves very, very hard. So we've got here silver basically moving a little bit up. We've got 2 weeks underneath the 26. Of course, if we get a close above there, that will probably expose 26.50 into 27. So silver, very similar setup to gold, and you'd be following both of those very closely together. Let's talk about Bitcoin though. So I had Bitcoin trapped within a symmetrical triangle. I'm sure a few of you have had this type of triangle set up and shown through. We kind of knew that there could be a chance of a blow off here. We had that big sell off. Last video we made on this channel, we talked about the blow off event in Bitcoin and how this happens time and time again. You can go back and check that. Basically, whenever you have a sell off that's so deep, 20-30% in Bitcoin after a run like it's had, it will come up. It will kind of look like it's going bullish to all-time highs, and then it will find weakness. And that's what's happened here. Now, it's broken through and it's come back down to pretty much the lows that it formed last time. Look here, 30,184 on this exchange, and it came down to 30,100. Now, if it cannot hold this level, where do we go next? A few people are saying 20,000. And that's certainly possible. Obviously, there's huge amounts of structure resistance here. And that would be a big dive even for Bitcoin after a run like this. The other way we can do it though is we can take this particular middle of the symmetrical, extrapolate that out from the break, and then say, okay, maybe 25,000, this kind of zone is where it would be targeting. But for a lot of people, this will be the first area that they're very interested in, $30,000 on Bitcoin. It makes sense. It's a 10,000 decimal. We've now got almost a 50 exponential just sitting behind on the daily, and we can see that has not been touched anyway through this particular crash off. But if we also go to things like the weekly, we know here we're very, very far away from the 20 exponential. Now, if we take a look at the previous kind of crash that happened in 17, what you'll notice is it was picked up by the weekly 50 in this case. The 20 held initially, then the 50. Now, if we're thinking about that move and we're thinking about where Bitcoin could go to, it makes sense why it could go so low because we're so far away from this 20 exponential. But I think everything's about this 30,000. Remember, if 30,000 is breached and sold at below, that will open the floodgates for sellers here on Bitcoin, and it would probably fall through fairly quickly. The pressure is actually coming on right now as of the time of recording this video. If we get that, then we probably start triggering down, potentially to 26 or 25. And it's going to be one of those things where you want to jump into the smaller time frames and have a look at what's going on. But there is certainly a lot of pressure coming under this 30,000. And my kind of thoughts are still the same. Weakness into Chinese New Year, Lunar New Year, 12th of February. And then for that week, we should see a stagnation in the market. We should see basically a kind of sideways accumulation effect throughout that time. And if we see a breakout of that accumulation, that's probably going to be the trigger for buying pressure to come back into Bitcoin. So I think it's playing out very, very similarly to what we've said pretty much since December on this channel. Very similar kind of movements through the January period, and especially that mid-January started to sell off, very similar to last time. So let's talk about these stock markets. What's going on here? Well, we'll start with the Nasdaq, the outperformer right now. Look at this thing. It's almost beautiful in terms of how much it's moved. We've got here kind of the channel or the level that we thought when it broke through, there was a chance that it would go this distance. Now, if we take that distance, we're very, very close to achieving that. It's around that 13,500. We're sitting at 13,400 right now at the time of this recording. You'll notice we're quite far away from the weekly 20 as well. And that's been a very good zone for purchasing the Nasdaq on the way up. So if we did get a correction in February, would this make sense? Yes, it would. We had previous resistance, previous resistance, previous resistance at a 20. So if we did see a sell-off now, do we think that 20 could hold? I think that it would certainly make a lot of sense. To know when a market like this is actually going to continue the decline down to that level really comes down to understanding some of the things that it's done on the way up. Well, firstly, 20 moving average on the daily has been the best buy zone, and we've maintained this throughout the entire bull run ever since we saw the 1-2 here. We've basically just said this 20 has been the buying area, and I'm sure, and I know quite a lot of you out there have been looking at this level quite closely. it continues to maintain buying pressure. Now, if it got through and closed below this, of course, that would be your signal that should trigger back down to previous resistances, and it will be that deeper correction that could happen in Feb and March. But for now, it looks like this Nasdaq is basically getting a little bit carried away. It's potentially going to that 13.5, 13.6 level, and then it might start the sell-off or might start some correction, but still looks incredibly bullish, and it's hard to really fight the charts right now. I mean, it's been bullish the whole time, and if you're waiting for a correction, I think it's fair to do so in Feb and March, but at the same time, it's trading bullishness. I mean, that's what it is. We follow the price action here on this channel. Looking at the US 500, similar kind of thing. Basically, the 20 moving average here again has been holding it up, 20 exponential, 20 exponential, 20 exponential. Every single time we've seen buying pressure come through on that particular moving average, and it shows you how good it is. We've also got the top end resistance here in terms of really a level where we can take profit, and we're about to kind of reach that on the S&P 500. So that's been a pretty in place kind of channel throughout this bull run. Again, we're almost approaching some pretty interesting times here. We kind of knew that the 38.50 would be a level that would be reached, and there is a reason for that. If we add on a pivot here and we add on the kind of monthly daily high pivot, what you'll notice is that we have hit that monthly R2, and this has generally been that kind of point that the market has struggled to get through. Monthly R2 was reached in November, struggled to get through there, didn't even get close to it in December, and now we've hit it again in January. So monthly R2 literally reached just around that 38.60 level was reached. It's hit the top of our trend line. Will this start a little bit of selling pressure? It certainly kind of points to many things coming together here on the S&P 500 right now. So that brings us to the end of this video, guys. If you enjoyed this video, of course, make sure to give it a thumbs up and subscribe to our channel. And on top of that, I just wanted to let everyone know that while we had to have a couple of days off due to some personal reasons, I will be back. We will be doing Sunday videos again, and we'll also be doing our Monday live stream openings next week. So just remember, come along to those. We will be doing them, and I always announce those live streams on Monday on the channel to subscribers. See you there, guys. Good luck. Bye for now.